As discussed earlier, I'm going to upload couple of more illustrations on full-fledged sum on PGBP. Uh, let's start with the illustrations. Okay, first one, the profit and loss account and other relevant information in relation to the business of Sri Salilkar are given below. Compute his total income for AY 22-23. A PL is there. एक PL दिया हुआ है आपके साथ में कुछ एडिशनल इंफॉर्मेशन भी दी हुई है आपने को. वी आर ट्राइंग टू सॉल्व, वी आर ट्राइंग टू फाइंड आउट द टोटल इनकम ऑफ द मिस्टर सलीलकर. The net loss, this would be our starting point. We will start from this figure. If it is net profit, then we will start from net profit. If it is a net loss, then we will start from net loss. So my net loss as per books of accounts 23,400, there is a negative, so it is in bracket. Now general expenses, unless and until nothing is given, it is allowed. Interest on bank loan, unless and until it is mentioned that it is unpaid, it should be considered as allowed. Repair of furniture allowed. Bad debt allowed. Provision for bad debt, yes, this is anticipation of losses, this should be disallowed. So I'm going to add back this one, provision for bad debt 1200, with a suitable notes that why I'm going to add back this. I mentioned any anticipated loss is not allowed as deduction. Now, fire insurance premium, if it is related to the premises involved in business, nothing to be done. If it is not related to business premises, then it should be added back. We don't know, wait for the additional information. Household expenses 13,000, surely this is your personal expenditure, it should be added back. So I added back 13,000 with suitable remark. Remark is like personal expenditure is not allowed as deduction. And that means that remark is nothing but the reason why I am going to add, why I am going to reduce. The reason is should be there. Okay. Income tax is specifically disallowed under section 40A. So my third addition, income tax 5,000 with suitable remark like income tax is specifically disallowed under section 40A. Okay, you may frame in your own language, it's fine. Donation to approved institution, I am presuming that it is eligible for ATG. It is not like donation to scientific research association, etc. So it should be disallowed. However, one can claim deduction under section 80G. But 80G is the after gross total income. So while computing PGBP, the entire donation should be added back. So I added rupees 2,000 with suitable remark. Corporation fines, any penalty should be disallowed, so it should be added back, it should not be considered. So I added 6,000 with suitable remark. Fines paid in contravention of law is disallowed. Okay, now next one is interest on capital 29,000. Interest on capital, that is interest to proprietorship, this is a proprietorship concern, hence this interest should be disallowed. No one can earn from himself, so I'm adding this 29,000 with suitable remark. From this side, from credit side, that okay, there is one more item, depreciation. If nothing is given, we will presuming that it is allowed. Here gross profit fine, dividend 10,000 is mentioned. This dividend should be taxable under the head income from other sources, not taxable under the head PGBP. So I am going to add back this one, reducing this one. So dividend I reduce from my PGBP income, but it would be taxable as income from other sources. Again, I taxable under the head income from other sources. Now my PL part is complete. Now, unless and until some additional information we find, then our PL part is complete. Now, household expenses includes life insurance premium of rupees 1,000 on Srikar's own life. Okay, we Entire household expenditure has been disallowed by us while computing our PGBP income. But one information that this 1,000 rupees LIC premium has been paid. This LIC premium is eligible for deduction under 80C. We will consider after gross total income. So I am considering this after gross total income rupees 1,000. Depreciation as per IT rules works out rupees 15,000. In the PL statement, I have debited only 13,000, but as per income tax rules, that is under section 32, it should be 15,000. So I'm eligible for 2,000 more deduction. You may directly reduce 2,000. You may directly reduce 2,000, or one can do in this manner. Add 13,000. That means entire depreciation as per books of account I added, and entire depreciation as per IT rules I am treating in the minus item, negative item. Next one, 50% of bad debts are allowable. That means 50% is allowable and 50% is not allowable. Out of 2,400, 1,200 is allowable and 1,200 is not allowable. So 1,200 should be added back. I am adding this one, 1,200. Next information, general expenses includes wages of domestic servant at the rate of rupees 130 per month. Since the person is this wages, can I say that this is my personal expenditure? The person is deployed in my house, so this should be considered as my personal expenditure. Henceforth 130, this is included in general expenses here. That means if it is included, my profit, my loss figure is on higher side. If this expenditure should not be there, so my profit would be impacted. So 130 multiply by 12, that means altogether 1,560 should be disallowed because this is my personal expenditure. During the year, Shrikar took away goods for his personal use, costing rupees 16,000 by crediting the sale account with 17,500, although the market price of the goods were 18,000 at that time. That means this is drawings. This is nothing but drawings. The sale account credited with 17,500 should be nullified. Similarly, purchase of rupees 16,000 should also be nullified. So 17,500 is credited in my PL statement. Due to that, my sales, my income is on higher side. So I'm for nullifying this thing, I'm supposed to reduce this thing, and for the 16,000 which is on my purchase side, if I want to nullify this purchase, I require to add it. So my addition is 16,000. Altogether, all addition total is 87,960. All additional information we already covered, already done, so nothing to be left. Okay, fine. 87,960. The net of this addition is 64,560. Reduction items are 42,500. This is the simple total, and my PGBP income is 22,060. Added 10,000 income from other sources, that was the dividend. My total income, my gross total income is 32,060. I'm eligible for two deductions. One is for LIC premium and another one is for this donation to approved institution, 80G. I already discussed. 50% of this is eligible, so I made 50% of it, that is 1,000. Altogether it comes to 2,000. My total income would be 30,060. 30,060. Is it clear? Now I'm going to second one. Mr. Sonu has given you the following PL account for the year ended 31st/3/2022. PL statement is there with some additional information. We are required to compute income from business for the AY 22-23. If in case of PL, we will start with our net profit as per PL statement, that is 10,000. I am starting from this point. Net profit as per books of accounts, that is 10,000. From very first items of the PL, we are going to analyze. Opening stock, if nothing is given, no treatment is required. Purchase, no treatment. Wages, no treatment. Rent, no treatment. Salaries, no treatment. Depreciation, no treatment. Municipal tax no treatment unless and until it is specifically mentioned that this tax has been paid for any property which is not covered under the head PGBP. Interest on capital, yes, this is a proprietorship concern. Interest on capital should not be allowed. So my addition regarding interest on capital should be 5,000 with suitable remark. Then scientific research expenditure allowed under section 35, rent of machinery allowed, patent purchased on 1/7/2001 4,000. It is a capital expenditure, intangible assets acquired on or after 1st April 1998. So I'm eligible for depreciation, not entire amount should be debited into my PL statement. So this 4,000 should be added back. Patent, the cost of patent 4,000 I added back with suitable remark. However, I'm eligible for depreciation at the rate of 25%. Preliminary expenditure, it is 8,000. Unless if I presume that it is 1/5 of my entire preliminary expenditure, then fine. If it is not, then 1/5 should be considered. Remaining should be carried forward for the next year. Hope so. Any additional information is there or not? First of all, we will check that one. Then we will do the suitable treatment on this. So there is two adjustment we required on these two items. I am pointed out this one. Provision for bad debt 6,000. It should be disallowed. So I added by provision for bad debt 6,000. Income tax surely disallowed 5,000. So I added by rupees 5,000. Now here sale fine no issue, closing stock fine no issue, profit on sale of investment. This should be taxable under the head capital gain. It should be nullified while computing our PGBP income. So I am reducing profit on sale of investment rupees 10,000. Be careful, it is taxable under the head capital gain, but at this point of time we are required to computing PGBP income. We are not going into total income, so I add back this one while computing my PGBP income. Now PL statement is okay. Wages paid includes wages paid for installation of machinery 2,000. Obviously this should be capitalized. This should be capitalized. Henceforth, I am required to add back this wages 2,000. I added back with suitable remark, and point number 5 is my remark note number. This is the reason should be capitalized and added to the value of the assets. Okay. Then other information, all preliminary expenditure was incurred during the years. Okay. But I feel this entire expenditure was incurred by the SSE during the year. So the rule is that under section 35D, 1/5 should be allowed in this year and remaining in 5, that means 4 equal installment. That means altogether 8,000 should be considered allowed in 5 equal installment. So entire I'm adding back, and out of this 1,600 is allowed. 1/5 of 8,000 is 1,600. One can do 6,400 addition, that's fine, but I'm going with entire 8,000 is added back and 1,600 is considered as a deduction. Depreciation allowed for income tax rupees 6,000 on assets other than patent. Okay, that means this 6,000 does not include depreciation on patent. However, in our PL statement, depreciation is debited by rupees 20,000. So entire 20,000 we are required to add back. I am making addition to this one, and depreciation as per income tax law 6,000 plus depreciation on this patent at the rate of 25%, because this 6,000 is not cover depreciation on patent. So on this patent acquisition 1,000 depreciation is also there. So all together my depreciation, allowable depreciation would be 7,000 and disallowed entire 20,000. One can net 13,000 can be also be accepted. So the total for this addition, all addition, I think all additional information done. Yes, done. So the total for all of this addition would be 50,000, and the total net 60,000. After reducing all this reduction item, my PGBP income is only 41,400. I did not follow 44 AD right now, or AAD, AF. I am not following the presumptive scheme. Ignore 44 AD, AE, and AF. Okay, ADA. Sorry, AF is no more. AF earlier there was there. This illustration is complete. Now I'm going to third one. Mr. Albert has given you the following PL account for the year ended 31st 3 2022. It's a PL statement. Since it is a PL, we will start from net profit or net loss figure. That means that our starting point would be this one. And some additional informations are there. We are required to compute income from business. Income from business we are required to compute. Our starting point net loss as per PL statement is 2,08,000. Since it is a loss, henceforth I put this figure in bracket. Now comes from very first item of the PL. Opening stock, nothing is required to be done unless and until no information. Purchase, nothing, again ignoring 44 AD, 44 ADA, and 44 AE. Okay. Know-how purchased on 1st April 2001 for rupees 8,000. Basically, this is a capital expenditure. Regarding depreciation, we don't know, so I'm putting an asterisk mark over this. That means we are required to reconsider this one once the clarity regarding depreciation is there. But obviously, this entire 8,000 should be added back. I'm adding back this one with an asterisk mark considering depreciation. Preliminary expenditure, same issue. We are supposed to understand, is it in the same year or it is 1/5 of the entire preliminary expenditure. Provision for bad debt, provision for income tax should be added back, 8,000 and 7,000. So I added this 8,000, added this 7,000. Next is wealth tax. Obviously, wealth tax is also disallowed. I added wealth tax also. GST. GST is allowable unless and until no information regarding payment is there. We will presume that it is paid within the due date of filing return. Right now, we are considering this is allowable. Custom duty, same. Rent paid to proprietor for use of commercial office. Rent paid to proprietor, no one can earn from himself. So this 10,000 should be added back. Salary 40,000 fine, depreciation 20,000. We don't know what is the depreciation allowable as per income tax law. So we are considering it is equivalent. So I'm ignoring this part right now. But if additional information is there, so we will consider accordingly. Municipal tax paid for own property 10,000. Whether this property is used in my business or profession, I don't know. First of all, I'm considering this is my business property. Interest on capital paid to proprietor. No one can earn from himself. So this 5,000 should be added back. Rent of furniture, fine. Donation of goods, it should be disallowed. Donation of goods. Donation is your personal expenditure, so it should be allowed. Children tuition fee, obviously this is your personal expenditure, it should be disallowed. Rent for household, okay, rent for your house, it should be disallowed. Okay, now from this side, okay, debit side is complete. Here sales, closing stock, nothing to be done. Additional information, SSC overvalued the opening stock by 10%. If it is overvalued by 10%, if this value is overvalued by 10%, surely this figure is on higher side. It should be come down. So what should be my addition? I'm to nullify this overvaluation, I require to add something. I add 3636. How could I compute this one? My 40,000 is the 110% because the actual value of the stock is overvalued by 10%. So this 40,000 is 110% of the my value. So my value of stock is 36,364. 10% of it is 3636. That is the overvaluation. I added this one in my computation. Okay. Depreciation on tangible assets allowed for income tax purpose is 12,000. Here I have debited 20,000, so it should be nullified. So I'm going to add back this 20,000, and on tangible assets I'm eligible for 12,000. I consider this 12,000 as a reduction, less item. Moreover, now it is clear that on tangible assets it is 12,000. Intangible assets like know-how, which I bought in 1st April 2021, depreciation is required to be provided 8,000 at the rate of 25%. That comes to 2,000. So I added this 2,000. Now this asterisk is clear. This asterisk is clear. Still, I have some doubt in PBD preliminary expenditure. GST paid till filing of return is only 4,000. GST payment, GST payment only 4,000. We debited 6,000, but payment till filing of return made 4,000. That means 2,000 should be disallowed. So I'm adding 2,000. Custom duty paid for last year not included in PL rupees 3,000. Last year there was some custom duty, but now this was paid. So on payment basis, custom duty is allowable because it is a 43B item. So there was a reduction item for custom duty of last year, that is 3,000. Okay. Now we all additional information is completed. Now on one thing we are required to take our call, we are required to take our assumption, that is preliminary expenditure. If you think this is a 1/5 of the preliminary expenditure incurred, then fine, no treatment is required. If you assume that whatever expenditure we incur, entire expenditure is debited into PL, so in that case 10,000 should be added back. 10,000 should be added back, and 1/5 of this, that is 2,000, should be reduced. Okay, so my total entire solution is there. So the addition of this addition item is 1,05,000. Now my net loss 1,03,000, and after adjusting all this thing, my profit and gains of business or profession comes to rupees 1,18,364. Is it clear? Is it clear to all? If you have any question, any doubt, please comment. Please comment. Now one more illustration. From the following profit and loss account of Mr. X for the year ending on 31st March 2022, compute his gross total income for the AY 22-23. There is a PL statement is there with some additional information. We are required to find out, we are required to compute its business income, no, gross total income. Okay. In case PL is there, we will start with this figure. That means net profit as per PL statement. So my net profit as per books of accounts is 43,000. Opening stock, nothing to be worried. I'm ignoring 44 AD. Purchase, nothing to be done. Salary, nothing to be done. Rent, rates, tax, nothing to be done. Legal charges, nothing to be done. Miscellaneous expenses, unless and until there is no information, nothing to be done. Provision for bad debt, surely this should be disallowed. Similarly, provision for income tax should be disallowed. Okay. I'm adding 30,000 provision for bad debt and 40,000 provision for income tax with suitable remark. And then salary to Mrs. X. Okay, Mr. X we are doing now. It is salary payment to Mrs. X. This is relative. She is relative to Mr. X. Let's see whether it is reasonable or unreasonable. Any additional information is there or not. We are wait till the additional information. Depreciation 40,000 is debited into my PL. From here, sales fine, closing stock fine, income from house property is there. It should be taxable under the head income from house property. It should not be taxable under the head PGBP, and interest on PPF is exempt. That means these two incomes are not taxable under the head PGBP. First of all, we are supposed to nullify the effect of these two income from house property and income which is not taxable. We consider this two one, and however this out of this two, 80,000 is taxable under the head income from house property. So I'm considering this 80,000 under the head income from house property. I'm considering this as a gross annual value. No information. If there is information regarding reasonable expected rent are there, we will consider that one. Else this should be considered as my gross annual value. So my PL component are completed. Unless and until there is additional information otherwise provides, we will consider this is my income. Now additional information suggests that purchase includes rupees 1 lakh paid in cash to a cultivator for purchase of agricultural produce. He is directing towards 48.3 cash payment in excess of 10,000. Now we will consider rule 6DD. In rule 6DD, it is specifically mentioned that if payment is made in cash to a cultivator, that is a farmer, then no 48.3 is not applicable. Okay. Accordingly, no treatment is required. Here it is. Cash payment to cultivator is covered under Rule 6DD. 6DD provided a list in which, in those cases, you can make a payment more than 10,000 in cash at a time. Thus, this payment does not hit by provision of section 48.3. Okay. Purchase also includes 1 lakh paid by way of compensation to the supplier as the SSC was unable to take delivery of the goods due to lack of storage space and finance. Fine. Nothing to be done. It is their normal business transaction. Opening stock was overvalued by 25% and closing stock was undervalued by 25%. If my opening stock is overvalued, that denotes my income is on lower side, and if closing stock was undervalued, that also denote my income is on lower side. So what is my opening stock? It is 4 lakh and closing stock is 4 lakh 80,000. We require to add undervaluation of closing stock 480. 480 is the 75%. I believe it is undervalued by 25%. Yes, it is undervalued by 25%. So it should be 480 divided by 75%. So my actual closing stock figure I derived, and 25% of it, that means my closing stock would be 6,40,000, and 25% of it, 160, should be required to be added. Similarly, in case of opening stock, overvaluation of opening stock, 4 lakh is in my PL statement. It is overvalued by 25%. So I will divide by 125%. I got my value of closing opening stock. Its actual opening stock would be 3,20,000, and 25% of it, that is 80,000, that is the overvaluation component we are required to add back. Now, salary includes 15,000 paid as a bonus on the occasion of Diwali over and above the bonus payable under the Payment of Bonus Act 1965. No issue. We paid to the person. If it is paid to our employees, no addition required. Rent rates tax includes 10,000 on account of disputed sales tax demand, 3,000 on account of municipal tax for let out property. It also includes 5,000 in custom penalty paid during the previous year. Okay. Regarding penalty, it should be added back. I'm adding back this one, 5,000. Regarding this 3,000 municipal tax, since it is relating to let out property, it should be considered under the head income from house property. It should not be deductible under the head while computing your PGBP income. So I add back this 3,000. and this 3000 is available as a reduction while computing my income from house property. An amount of rupees 20,000, and this regarding 10,000, obviously this is a dispute. Even though it is disputed, if it is paid, nothing to be done, it is a tax. If it is paid, and it is a sales tax, okay. An amount of rupees 20,000 due from customer was written off from the provision for bad debt, okay. So this should be considered. The amount is written off in the accounts of the customer, so it should be deductible. It is a bad debt, it is nothing but bad debt, so it should be allowed as a deduction. I'm reducing this 20,000 since it is write off from the provision for bad debt, so it would not hit my PL. That means in my PL statement, this bad debt is not debited, so I am separately reducing this bad debt while computing my PGBP, income from PGBP. Mrs. X is a law graduate and is actively working in the SSA's firm. Okay, this denotes that this salary payment to Mrs. X is not unreasonable. She is a graduate and she is working. She is graduate and working in the SSA's firm. A reasonable. It shows that this amount is reasonable payment. So nothing to be done regarding this. While computing income from house property, so no information regarding standard rent, etc. given. So we will consider 80,000 as an annual rent, as reduced by 3,000 municipal tax, 77,000 we got net annual value. One deduction is available. Interest on loan is not there. So one deduction is available, that is standard deduction at the rate of 30%. 77,000 multiplied by 30%, that comes to 23,100. Net 53,900 is considered as income from house property. Try to understand the format, details, amount, so that no amount is conflicting while computing gross total income. So the column is very clear. These two figures are required to be added. Got it? My PGBP income, this is the addition, 78,000 after 121. This is the reduction, 12,000, and again this valuation of stock is required to be added back. So total PGBP income is 2,52,000 plus my house property income 53,900. Altogether my gross total income comes to rupees 3,05,900. Is it clear to all? Is it clear to all? Is it clear to all? Hopefully you enjoy the session. Hopefully you enjoy the session. Please subscribe the channel. If still you have any question, any query, please comment either through YouTube on this YouTube channel, or on my app Vikash Mundhra classes. Okay, this is for you. Moreover, please, there is commercial tuition is going to be start from 20th January 2023 for June and December 2023 terms. Please, if you prefer that I'm fine with this type of classes or this type of courses, then please suggest my classes to your juniors. Okay, thank you.